I mean, if you're a bullish in metals in general, that's what you want to see. You want a market that is not hot, but it's strong, and that's what we're seeing. It's not speculative. It's just strengthening with time, and you see volume improving, and also the resilience of the miners in down days on the gold price. And that is very strong. 2024 will be very different than 2023. I don't think it's going to be a continuation of the trends that we've had in 2023 in
The
terms.
price of gold has recently surpassed the $2,050 mark, experiencing notable gains amid investor confidence in a potential interest rate cut by the Federal Reserve during its upcoming monetary policy meeting on March 20th. This optimism stems from the belief that such a move would support non-yielding assets, with gold being a primary beneficiary. In response to an escalation in the Middle East conflict, gold prices surged over 1%, reaching a one-week high on Friday. Additionally, softer U.S. producer price index data contributed to increased expectations of an earlier rate cut by the Federal Reserve, further boosting the appeal of gold as a safe haven asset. Tavi Costa from Crescat Capital highlights the robust performance of gold, maintaining levels above $2,000. He suggests that silver is poised to lead the way in the precious metal markets. China has emerged as a significant player in the gold market, with data revealing that it added a substantial 225 tons of gold to its reserves in 2023 alone, valued at a staggering $13.2 billion. This ongoing gold-buying spree by China, which started in 2022 with monthly acquisitions, positions the country as a key contributor to the demand side of the gold market. The World Gold Council reports that among the BRICS nations, China is officially the largest buyer of gold in 2023, surpassing all other countries. Russia and India secure second and third places, respectively, in gold acquisitions. Tavi Costa emphasizes that while central banks have been acquiring gold, their allocation on balance sheets remains below the levels seen in the 70s. This suggests the potential for increased allocations in the future. Coupled with a declining trend in global gold production since 2019, these dynamics create a favorable environment for potential drivers, affecting both the demand and supply sides of the gold market. Before you watch Tavi Costa's interview, subscribe to our channel and give this video a big thumbs up.
I mean, if you're a bullish in metals in general, that's what you want to see. You want a market that is not hot, but it's strong, and that's what we're seeing. It's not speculative. It's just strengthening with time, and you see volume improving, and also the resilience of the miners in down days on the gold price. And that is very strong because the big thesis to me is that the big pools of capital in the world economy are yet to allocate money towards gold. And those two are pension funds, large retirement funds in general have zero allocation to gold today. There was a good Bank of America fund manager survey that came out recently in which, over close to 90% of them have, or I should say 99% of them have, don't have over 5% of their portfolio in gold. And so those things are certainly adding to the pressure of potentially becoming a high demand for the metal. The other thing would be central banks overall. I mean, central banks have been buying gold for a while. We've seen the change in the last 5 years in terms of purchases, but more importantly, what we're seeing, which I think it's very good, is the fact that when you look back in the 70s, the purchases were close to 70 to 80% of their balance sheets, and now we're still at below 20% of their balance sheets. And so there's a lot of dynamics in terms of capital flows that can change towards potential drivers for the gold price from the demand front. And the supply side remain very, in general, very strict. I mean, look at the global production for gold has been declining since 2019, before the COVID recession. And that also coincided with other gold cycles like the 70s or even the early 2000s also had the production for gold declining.
The price of silver has surged to approximately $23.35 following the release of a producer price index report for December by the United States Bureau of Labor Statistics. The report indicated softer than anticipated data, contributing to the positive momentum for silver. Silver has demonstrated resilience amidst escalating tensions in the Middle East, even in the face of intense competition from stocks. Tavi Costa emphasizes the remarkable nature of silver's current position in the market, viewing the situation not as a concern but as a significant opportunity. He further underscores the multifaceted appeal of silver, noting its significance as a monetary metal and inflationary asset and its alignment with the green revolution. Silver takes center stage in producing crucial green technologies, particularly solar panels, as the world transitions towards renewable energy and carbon neutrality. The metal is a critical conductor in photovoltaic cells, making it an indispensable component in the renewable energy sector. According to insights from the Silver Institute's World Silver Survey, the demand for silver from solar panels alone is projected to increase by 21 million ounces this year, contributing nearly 2% to the overall demand for silver. Let's get back to the interview.
I mean, it's insane that we haven't seen silver lead the way yet, and also the miners. A lot of people are seeing that as a problem. To me, I see that as an opportunity. So I've been looking for ways to accumulate more assets in the space. I wish I had another year to make more accumulations, but I don't think that's going to happen. I don't have any influence in the gold space, but when it comes to influence in the price. But to me, it's just incredibly attractive to see a market that it continues to become stronger and stronger from the demand and supply side, and people are just completely neglecting to allocate capital in the space. And so silver remains sort of the sweet spot of not only a monetary metal, inflationary asset, but really falls into even the green revolution aspect that is really attractive. And so it is, to me, as close as it gets to a no-brainer. And so I like to own a lot of silver, and I also like to look for assets that have a lot of production of silver, which are very rare to find. And miners, to me, are in the same place. As you see the gold movement developing itself over time, it's hard to believe that the miners are not going to follow, and not only follow, but lead to the upside as they usually do, particularly the riskier parts, like the explorers that tend to make a lot of new billionaires in the industry every cycle. And so I'm really I'm very optimistic about that industry, and I can't wait to really make money in this overall space, because I think there's a lot of ways of making generational wealth in this industry over the next decade. I think the biggest surprise about the Fed, well, first of all, the pivoting of the Fed was key. I think some people and myself were expecting that at some point, but how soon it happened certainly somewhat shocked me, because I wasn't expecting that quickly that they would be turning. Nonetheless, who cares about what I think? I mean, in terms of the Fed minutes itself, is what is important about that has been the shift from inflationary worries about becoming more on the labor market, and some of the sentences they use to express their views about if the labor markets do start seeing some weakness, which I suspect it will happen soon, it will actually drive policy in a big way. And that means that they're going to be acting towards further rate cuts or changes even in the balance sheet policy and so forth. And all those things are very important for the commodity space, because I as I said before, I think inflation develops through waves. We've had a first wave in 2021 coming out of the COVID recession. And I think that's, the genius is out of the bottle when it comes to the psychological impact in consumers and businesses. And I think that's going to be continually pressuring consumer goods and services much higher in terms of prices. And especially the commodity space is going to be one place that will be a leading indicator of that. And so pay attention to times when you hear headlines like, inflation decelerates and therefore gold is rising.
The prices of precious metals increased on Friday in the aftermath of the United States and the United Kingdom's joint actions against the Houthi movement in the Red Sea, as investors assessed the potential consequences of that move and turned to the commodities as a safety net. Will gold and silver hit all-time highs in 2024? Or will silver outperform gold? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. We aim to reach 5,000 subscribers as soon as possible, and your support could make a big difference. Thank you for being a part of our community.